Hey, good morning, guys. It's TerrenceRe. Got another stock market update for you. Right now in the markets, take a look at the watch list. Now, actually, we got the VIX. The VIX is up, almost you could say 1%. We got the S&P. Now the S&P futures opened up a pretty good amount. Like there actually was a gap up on the S&P 500 this morning. That gap has since closed. It's off of the highs of the day, so it's almost relatively flat because you can see the Russell has went negative on the day, and the Dow futures have turned negative, and you got the Nasdaq futures trying to hang in there. It's about up like 0.5%, and you can see the S&P 500 is ne- um, getting ready to go red on the day. So gapped up earlier today on good news. You had good earnings from Tesla. Let me take a look at Tesla. Before I do that, let's look the bonds. The bonds are down a little bit today. Even gold is down. Gold has been ripping the past few weeks. You got the major FANG stocks are all up. Meta's up 2%. Apple, Amazon, Google, Microsoft is up 1.5%, and Tesla. Let's take a look at Tesla. Its earnings. Tesla had great earnings as usual. I don't remember a time when Tesla had bad earnings, and yet you still had this. So I don't put it was time for a bounce, and we got the bounce. So did the earnings cause the bounce? Who knows? But we got it right. So that's the story. We'll stick with it. On a previous video, I talked about it will run right up into this area. This is your next level of resistance. This should be the edge of the expected move for the week. Let me take a look at it. Go to the option chain. Okay, so we right here at that. So if you look, actually the edge of the expected move for Friday would be right around here at 162 and a half. And I want to say we hit that today. Let's see. The high of today was 161.42. So we went to the edge of the expected move, and that's right in this area, and it's holding. Excuse me. So you got this gap up, and if we go intraday, take a look at the hourly. All right, look at this gap. So on the hourly, on the intraday chart, now Tesla is overbought on the intraday chart. So if I was to pull up the RSI down here, you could see it's overbought, right? So at some point, I would expect maybe by the end of the day or maybe by tomorrow. Could happen, Monday or next week. I expect to pull back and maybe to come down here and fill this gap. So if I'm intraday trading or anything like that, I would be taking profits on this just based on that. Really no need to go over the earnings. Trade what you see. But Tesla did have good earnings. I will talk about one of the main reasons why I wanted to do this video is IBM. IBM had earnings, and I actually put a trade on it, IBM. Let's take a look at the daily. Look like it's starting to make a retracement, but let's take a look at the daily. You can see this is a big red candle today. It has reached oversold territory on the daily. I do think it'll make it down here though to the AB equals CD. So basically the length of this down move should equal the length of this down move. And all I did was buy a put. You can see over here, I paid $260 for it. It's been fluctuating. I was up a little bit. Now I'm like down like, maybe like $11. It's at 249. I went out to the February expiration, bought a put. You see right here, and I got 22 days on it. About the 132 put. So when I do something like that, I'm expecting this trade to hit this target within a day or so, maybe by tomorrow. and then I'll look to burn it, um, if possible. I'm only I won't hold it until, like, let's say, so I bought 22 days. Give me maybe like a week or so at the most that I plan on holding this. I'm not gonna risk, even though I paid 260, I probably would get out of it if it got down to about 100 or so. Um, but like I said, I expected to hit down here and hit this target of 132, and probably it'll go below 132 and make it all the way down to like 131. But I bought the 132, and then I'll sell out of it once it gets to that area. Probably make about 100, maybe 130, something like that, 50% of what I risked. Uh, and that's that. Basically, IBM actually had the their earnings weren't bad. They had a estimate of earnings per share of 360, and they actually had 360. I don't know if you can. It has beat on here, but basically it did what it was supposed to do. Revenue, the estimate was 16.4 billion, and they beat that. They had actually came in with 16.7 billion. And so with that, you would say, well, why is it going down? That's the tricky thing about, someone could give you the news and you probably still can't trade it, because that sounds like good news. But also, they're confirmed that they are going to lay off. They're going to be laying off. So a lot of these tech companies are laying people off. Let's look over here at I got a little news that I can pull up on IBM. So right here, if you look over here, it says IBM and SAP become latest tech companies to lay off thousands of workers. It says tech layoffs. IBM latest firm to slash workforce by cutting 3,900 jobs. So I don't know if that's the reason why it's going down, because the previous companies that had earnings, I think Microsoft announced that it may have some layoffs. I think it did lay off some people, but that didn't stop the stock from going up. I think it actually went up on that news. Let me see if I got some news on Microsoft, if it's on here. It's probably not on here anymore, but I think they did announce that they would some layoffs. I know Google did. Google had. I was watching TikTok. I don't know if you guys seen the some of the employees that work for Google that been making videos on TikTok about them about their day at Google. It was a couple that I seen. But anyway, you could see that it had been going up prior to this week. We got a 1, 2, 3, the past 3 days got some red days, but prior to that, it was going up. So you can have the news and still not know exactly exactly what the market is gonna do. I like to see the news only because I know I'm gonna get a move. I just want to get a big move. And then when you get a big move, you want the stock to move so you can form an opinion either way. If you just got that slow drift, it's kind of hard to get a trade on without any movement. Let's take a look at wrap this up. We take a look at oil. So I'm still holding the put spread in oil. My target is up here. It's my right around 85. Look at the position, and you can see I'm still holding it. I got about 20 days on it. So the one thing about selling an option, right? I took in. You see over here it says 20. It's $10 per tick in the oil futures. So basically, I took in $200 premium. I'm risking $300. If in 20 days this expires, this put option expires, and it's above my strike, at 78, I'll keep the whole 200. I'm not gonna hold it till it expires though. I'll burn it that last week and then take whatever profit I have. Um, I don't know. It just depends on how far it's up. When it get down to that last week, I may do it. right? Just to see. I normally don't hold all the way through expiration. Like I could, take my $50 off the table now, but it's trending in my direction, so I'm gonna stick with it. This IBM put, I'll look to hold this until it hits my price target. Or if it was to, pull back over a week and then the option deteriorated, you know, through decay. Because when you buy options, you need to be right. I actually tried to sell this, but it's so far already close to the target. I wasn't getting enough juice. Like, what was I gonna do if I wanted to sell this? Thought about doing a put spread, maybe selling the 138, buying the 143. You only get $80 for that, right? So that wasn't, even if I came closer and said sold the 136, bought the 141, and collect 129. But being that close to it, to the where it could pull back, I didn't want to do that. Even though I am confident it's gonna go there, I just said I would rather than a selling option that close with 22 days. I'd rather just buy it, spend a couple $100 and buy it. If it goes down and becomes in the money, you can see 130, 132. Let's say it hits there today. It's possible because it's still earlier in the day. So this is how you would price the option. You say, well, what would I make? If it 132 is out of the money right now, 135 is in the money. If 132 became in the money, it would be priced right here. So that's how much I would be looking to, anywhere between 395 and 415. And I already have a working order to get me out of this trade at 390. And so you can see right now it's kind of a low ball. I probably could up this, but I'll be sitting here at the desk all day, so I can move it around once it gets close to that price target. If I see anything else today, I will do another video. Make sure you hit the like button and subscribe, so that way whenever I'm doing something, you might get an idea. And how did I find this trade? Basically on TastyWorks, I just come over here to watch list, and you can put the watch list here, here. You can even bring it up in the middle. And I had over here, I had the Tasty hourly top equities, and here it go. And so it's showing you the stocks that are traded. I think it's, I don't know how many, it's like 20 of these, 20, 25, something like that. Stocks that are going through the platform that are the highest. Like these are the most stocks. These are the stocks that getting the most volume today. On an hourly basis, this is updated. So more than likely, you're gonna get one of these stocks is moving. So all I did once I seen that was come up here and then put the net change percentage and have it filter it by that. And you can see IBM, natural gas. I'll probably take a, natural gas is low. So I'll probably take a look at anything that's red. And you say, well, why the red? Because the red, meaning that it's going down, right? If I'm going to do any type of day trade with options, I'd rather buy a put than buy a call. Just because of the fact that puts, as they go down, they'll gain value a little bit faster, just because of the volatility will increase a little bit. That's not always the case, because sometimes you could buy a call and maybe something that's commodity based, something like that, and that dynamic will reverse. But when you're dealing with equities, I would rather buy puts if I'm going than buy calls. And this is like if I'm doing some type of day trading, I will do some swing trading off of this as well. So, but this just shows me where most of the action is. And if I come on here, more than likely, all these stocks got something to do with some type of news. I don't even know what this stock is. I looked at it, EDBL, but once I looked at it, it don't have options. So more than likely, this is some type of like stock that penny stock traders are trading or something, like, because it don't even have options. So I don't want no parts of it. Right? You see these long wicks. This is people getting wrecked. Somebody got wrecked in here, and I don't want any parts of that. But it's showing it to me. So if I looked up some news on it, I probably could. It says edible garden. It's some crap. But anyway, hit the like button, hit the subscribe button, hit that little bell notification so that you know when I got a video popping out, and so you know what's up. Hit comment in the comment section what stocks you looking at today, what trades you looking at. Let me know what you think of the IBM put that I bought today. With that, guys, I'm out. Peace.